So today I'm doing the stocks that I'm buying August 2023 edition. This is the most popular video series that I do on the channel where I go through the stocks that I've been buying in the last month. So this is all the stocks that I've been buying from the 1st of July to the 1st of August. I do this video series on the channel every month. I've been doing it for 5-6 years and it just keeps with that transparency so you guys know what I'm buying, what stocks I'm selling. There's nothing hidden in the background. I'm not buying stocks in the background and then saying, oh, look, I bought this and it's up so much. Or I'm not buying stocks and then, oh, it's not working out, I'm going to quietly sell it out in the background. Every single stock that I buy or ever sell is covered on this video series. So you can track along with how I am doing in the stock market. So obviously we're going to start with the stocks that I'm buying August 2023 edition. I will do the UK in a few days time. I have been more focused on buying UK stocks at the moment. The reason why a lot of them are having dips seems like, especially through the month of July, there was a lot of worries around the inflation data and that gave quite a few buying opportunities in the UK, I felt. Total opposite in the US. Today there's not many stocks on this list. There's 3 stocks I bought and 1 stock I sold. I was very quiet buying US stocks this month. Obviously the reason why, US stocks are flying. You look at the S&P 500, had a fantastic July into August. It's been doing absolutely amazing. So because of that, I've not really been actively buying it because most stocks I hold have been on a rally. And even 2 of these stocks, I would say, have even rallied since I've been buying them as well. So we'll go through this today. Hope you enjoyed the video as always, guys. Let's get started. And just a quick little plug here. If you do want my live buying and sales in real time rather than this video every month, you can join through the Patreon. You also get 2 exclusive videos a week and it does really support the channel so I'm able to make all these free videos on YouTube for you guys. So shout out to all you guys that are Patreon members. But we'll get on to the first stock. Now the first stock is PayPal. Now I'm going to keep this nice and brief. The reason why is because this information is probably going to go rapidly out of date tomorrow because they are going to be reporting their Q2 earnings tomorrow and that'll give us a fresh batch of information about what's going on. So bit of bad timing when it came to the video here, but I did buy PayPal through the month of July and it's probably the last time I'm going to buy it unless it drops on earnings tomorrow. I did start buying it PayPal and I especially tried to buy really heavy through the months of May and June as it entered that $60 range. Since then it has started to enter back in that $70 range through July and now it is sitting around about $75 and that is now where I am about break even on the position. So I don't really want to be buying too much more PayPal at break even. I want to pray that it goes back down to $60 and we might get that with earnings, and hey, if it does rally on earnings tomorrow then fine, I hold it and I'll start making some money from it. So tomorrow with earnings it's a win-win situation for me with PayPal because if it goes up we make money, if we go down I get to buy a few more shares back in that $60 range. So we'll see what happens. 83 million market cap. This is a really big market cap company. 31 times earnings, although that earnings is going to rapidly drop and I think sometimes people make the mistake of that. Now PayPal in the last quarter, which they did actually drop off, I thought the last quarter was actually really good. You can see here, Q1 strong starts the year with revenue and EPS outperformance. Total payment volume up 10% and 12% on FX neutral. Net revenues up 9% and 10% on FX neutral. So double digit growth company here, as you can see. GAAP operating income growing at 41%, and that's obviously some of the profitability starting to really come back into it. EPS as well, that was growing at 33%, or you can see here on a 61% on a non-GAAP basis. Operating free cash flow of 1.2 billion, free cash flow of 1 billion. You can see the raised the EPS guidance, as you can see here. Q2 was guiding on a 6.5 to 7% on a spot basis. EPS as well expected to grow 24% and 26%, repurchasing 4 billion of shares. Obviously that's absolutely fantastic as well. So you've got a company that's really focusing on the profitability and buying back shares. And if you actually look on the valuation now, PayPal is trading at, this is what I talked about earlier, the profitability is starting to really come back on it, and this is what I think people are making the mistake of. Currently trading at 32 times earnings, but on a forward basis 15. If you look at what PayPal has historically done, it has currently traded at, if you look here, it's up to 70, 50, 54, even if you take out that crazy share price run that it did go on, 48, even if we go back to 2016, 36 times earnings. Now, a few people might say, it's not growing as quick as what it used to do. And I would say, yeah, you know, it used to grow a little bit faster than what it is. But it's still going to be putting in this year is forecast 7.5%. Next year, a rebound up to 9%. I think we'll start to see go to 10% as we expand through Braintree, buy now, pay later. If you've got a company growing at very, you know, lower double digits, that's a growth company. So if you're talking about you picking up a growth company at 14, 15 times earnings and it's normally trading at like 30, 40, 50, I think this is an absolute bargain. And it's same on the free cash flow as well. You know, really good amounts of free cash flow is going to be coming on here. So yeah, I think PayPal is definitely one to be watching at the moment, and I did buy some more PayPal. Moving on to the next one, Walgreens. So this is the one that hasn't done as well through the month of July and into August. It's had a pretty tough time. As you can see here, the stock dropped from earnings, but has put a little bit of a recovery in here. But overall, the stock is on a bit of a downtrend, and it has been for a few years. It's been struggling with profitability, and I've been buying this stock because I'm hoping they have a new CEO that can start turning it around. And also, I pick up a 6.5% dividend yield. Now, they did come out with recent earnings, and the recent earnings were a little bit disappointing to the market, and that's what caused the share price to drop. The reason why is they missed on EPS. They did have good growth of 8.7%, so there's no issue with the growth here, and a lot of that has been shifted with their new healthcare segment that they are using to drive their future of their business. But there was a cut down on the EPS, and you can see here this was due to macro conditions and a lower CV-19 vaccine and testing as forecast. So basically, people are coming in and not spending as much in Walgreens at the moment, which is a bit of an issue. And also, the forecast they had for some CV stuff hasn't turned out what they thought it would do, and that's the reason why the EPS has gone down, but the revenue has still been doing okay. So hopefully they can resolve these issues. Now, and you can see that clearly on the earnings, and sales growth was good, but they struggled to keep a lot of their products at fuller prices and get people into the stores. Hopefully in the long term they can resolve that with, you know, obviously improving macroeconomics, and once these CV numbers kind of go out of the system, which gave them a really good boost, as long as they can keep growing sales and then they improve those cost of sales, I think they'll be okay. The main thing is the healthcare segment. You know, the big thing that I invested in this for is that the healthcare of Village MD and Walgreens. You know, you go to Village MD, you know, you go see someone, and this is what's wrong with you. Go back next door, go to Walgreens, go back from Walgreens. This is what I think is the shift in the business going forward. So this is always the big thing that I'm kind of looking for when it comes to Walgreens earnings. And looking at Walgreens earnings, they were fantastic. You can see here the segments, the healthcare business grew sales at a combined rate of 22% in the quarter, and also other parts of the business as well grew very well. So that's fantastic. So this is still growing really well, and hopefully that can drive profitability up as well going forward as well. So that's the key part, and that was doing really well for me when I was looking at Walgreens. So the turnaround plan at the moment has unfortunately taken a little bit of a step back because they are growing very well, but the problem is they're not driving up the profitability. So give it unfortunately the next kind of couple of quarters, the share price could be stagnant from here, but if they are able to get people back into the stores, macro environment improves a little bit more, and they grow that US healthcare segment as they're doing, and that comes a bigger part of the business, they should do okay, I believe, still. So yeah, a little bit of a disappointing recent earnings for Walgreens, but I still think the green shoots are still there inside the business. The next one was Alibaba. So Alibaba, I did pick some more shares up. The first time I picked some shares up in Alibaba for a little bit of a while. Obviously, as you guys probably know, the stock price kind of peaked in 2020. The stock price has been on a very bad run since then. Obviously, a lot of situations between China, US. Obviously, you got the kind of every time China opened up, they went, there's too many cases, we're going to shut down again. You've had the tech crackdown on the stock. So there's a lot of reasons why the stock's kind of got to these levels. And I've got to the point of view now where I'm like, okay, it's a bit too lowly valued. You know, this is the kind of king of commerce in China, not only just China, but a lot of the kind of Asia region as well. You know, this is a company that is going to be, with all the platforms it has, is still going to offer major amounts of growth and profitability in the next few years. And is it got to the point now where it's too low? And I think that's the kind of case with Alibaba. So obviously the stock price did have a bit of a rally at the start of the year. Now it went back down through July, they're kind of back into that $90 range. I did pick some shares up. It has had a little bit of a rally since, and once again, one of those stocks that has had a bit of a rally. And I do prefer Alibaba more into a double-digit kind of range than a kind of triple-digit range. So I don't know if I'll buy this one again unless it goes a little bit lower, but I thought I'm going to pick some shares up here. There was a little bit of a drop-off because of some more panic around, I think it was some China-related news and more political kind of news, and I thought a bit overdone there. Bought some shares. It has gone up back up a little bit, but there's kind of the good signs for Alibaba where they could kind of start recovering. Obviously, the CV cases, China aren't locking down every time there's 10 CV cases anymore. Obviously, as well, the Chinese government seems to be supporting the tech platforms a little bit more than what they have been doing in the last 2 years, and so maybe because of the regulatory kind of issues, that kind of disappears, and China go, you know what, we're absolutely killing our companies here. I mean, look at the share price of Alibaba. We need to start supporting them a little bit rather than making life hard for them. So I think that will obviously help them as well. The other thing as well is Alibaba's planning to split up into 6 different businesses. I think that'll help them as well. Obviously, I think every part of the business will get a better valuation. Obviously, you can own the parts that you want to own, and obviously that should give them a better way of controlling growth or getting growth in the businesses if you have someone managing all the separate parts of the businesses. And I think that this might get better value for the companies being valued individually. So I think that's something key to be looking at. And obviously Alibaba itself, it's only not too long till these guys are actually going to be reporting earnings. But as I say here, you're going to start getting the recover in profitability. So a year ago 162 up to 204. If you look on the current year, you're going to go from 764 up to 861, and the year after, if you go from 861 to 963, and if you look at the current year forecast, you're expecting nearly double-digit growth again as we kind of see the rebound start coming back into China from this the lockdowns and obviously the crackdown starting to disappear a little bit now. So that's obviously decent amounts of growth, and then the profitability is getting driven up, and then you start looking at what it's kind of valued at. It's looking at 26 times earnings on a forward basis. You're talking around about 11 times earnings for this. The king of e-commerce in China, 11 times earnings, 10% growth. I think that's a pretty attractive valuation for Alibaba, where we should see Alibaba start pushing up to a lot better values. And I think that's why obviously I decided to pick some shares up. So those are the 3 stocks I bought. Obviously a really short one, because at this point we're normally about 20-30 minutes into the video, and as well as that, I've kept it a little bit more brief, because I know a lot of these companies are going to be reporting earnings within the kind of next kind of couple of weeks. So this information could go out very quickly depending on what these the companies report on earnings. But those are the 3 stocks that I did buy. When we get to the UK one in a few days' time, there's going to be a lot more stocks on that. I think there's around 7 or 8 stocks on that one. But there was one stock that I did sell. I didn't sell it all. Sell's the wrong word. I trimmed the position. And the stock that I trimmed the position on is DraftKings. So there was actually a 4th stock I did buy. I actually forgot to mention it actually in the last bit. But now I've talked about DraftKings, I remember that this is the stock that I nearly forgot off the list. So I did trim some shares in DraftKings. So I'll go through the reasons why I trimmed some shares in DraftKings, and then what the stock I bought. So I didn't trim the position by DraftKings by a lot. I think it was around about 3 or 4% of the position I trimmed. I took a little bit of profit off the table on that one because we are up on DraftKings now. The reason why I trimmed it is just because of risk allocation. So you guys probably know DraftKings is my favorite stock on the stock market, and I was buying this dip all kind of through the back end of 2021 and 2022. And I'm very jealous if anyone got any shares around that $10 mark. The problem is I just bought and bought because I had so much conviction in this stock. That I got to the point where now the stock has started rallying, I'm quite overexposed in it. Like, my portfolio with DraftKings is I think DraftKings probably makes up 20-30% of my portfolio overall, which is a lot. My rule is never, even on my most favorite position, never go over 10%. And I am over that by probably nearly probably triple, which is quite a bit. So I've got to start just taking some risk off the table with my position size, because it's just so big. So if it wasn't for that, I wouldn't have sold any shares. But just because I was so massive on buying that dip through that period of time, I just have to reallocate the risk a little bit. So I trimmed a little bit of the position in a little bit of profit just to manage the risk a little bit. I still own loads of shares, and when I do the portfolio review for you guys on the Patreon, probably in the next kind of coming week really, you'll see that for sure. So yeah, that was only a little small trim. And the other reason why is to manage risk, but during that time frame there was a stock that dipped. And this is the last stock that I bought, which is Mercado Libre. So Mercado Libre had this little bit dip here where the stock dropped 10%. And on that day, I bought a really, really big chunk from selling off the part of the DraftKings position I sold. So it just worked out perfect, where I was like, I need to rebalance the position. Oh, and also one of the stocks that I really love that I've been waiting on a dip for nearly like the last kind of 6 months, just dipped. So I thought I'm going to buy that dip in Mercado Libre, and I did do, and since then the stock has gone up a little bit. So again, I'll keep this nice and brief because these guys are reporting earnings really soon, but the stock had dipped because analysts basically downgraded it, and it was like, okay, so if the stock is just diving because the analysts downgraded it, that's like absolutely stupid. And obviously the market realised, nope, we're being stupid again, sell this off, and then it rallied up. But obviously Mercado Libre, you guys know my thoughts, major company in Latin America, the Amazon of Latin America. So you imagine owning Amazon basically 10 years ago. It's basically that, so it should be really good. But then also you're getting the payments and the fintech part of the business, and that's even outgrowing the e-commerce part of the business, and also driving up really good amounts of profitability as well. So even though it's 98 times earnings, this company, because it's growing rapidly as well, but also the profitability it's putting in, it's that the earnings and the profitability is just dropping because the earnings are growing, faster and faster, where it actually looks really good value for the Latin America and the growth it offers, the Latin America Amazon, which is doing absolutely amazing. So those are the stocks I'm buying, guys. Hope you enjoyed the video as always. If you could smash the like button, if you're around here, subscribe. Let me know in the comments which stocks you are buying, and I will see you all in a little bit.